Alrighty, Leonard Spoto here with Asset Exchange Company. And what we're going to do today is just talk real quickly about the four basic requirements for a successful 1031 exchange. So before we get into it, just keep in mind at any point, if you have 1031 exchange questions or need to set up a 1031 exchange account, give us a call. Phone number 877-471-1031. I like to tell people that's actually the only thing you really need to know about 1031 is my phone number. My email address, though, is also here, Leonard at ax1031.com. So if and when you have 1031 exchange needs or questions, please do give me and my team a call. Okay, so Section 1031 of the Internal Revenue Code allows you to defer taxes on the sale of your investment property. You need to keep in mind four basic requirements for any successful 1031 exchange. Requirement number one, okay, properties must be eligible in order to qualify to even consider doing an exchange with them. Now, how is a property eligible for 1031 exchange? Well, it needs to be held for productive use in trade or business or for investment. Properties involved in the 1031 exchange must also be like kind. And this can actually be a source of confusion for some of my clients. Some of my clients think, well, geez, if I sell a 2-unit building, do I have to go out and buy another 2-unit building? That's actually not the case. All right. So you have a lot of flexibility with the 1031 exchange. You could sell, for an example, a piece of land. You can exchange out of that land into a rental home, sell the rental home, buy an apartment building, trade out of the apartment building, and end up with an office building. So a lot of flexibility on the type of real estate that you exchange in and out of. You also have flexibility on where you go. So I'm here in California. I could sell a property in California. I could buy in New York. I can go to Ohio. Anywhere in the country of the United States is legitimate. Now, a couple of things I do want to mention. First off is that foreign property is not exchangeable. So you cannot sell in California and buy in Canada, Mexico, Hong Kong. You have to stay in the United States. Now, the other thing to note is that inventory is not exchangeable. So if you are a quick flipper or a developer, what you probably own is going to be considered inventory, and that is not exchangeable, right? Inventory is something that you buy with a specific intent to sell. And if you are a flipper or a developer, your product is considered inventory and not exchangeable. All right. Any questions about whether or not your property will qualify? You just pick up the phone, you give us a call, and we will go over the facts and circumstances of how you use the property and help you determine whether or not you will be eligible for 1031. Rule number two, when you do a 1031 exchange, very important. Number one, you need to reinvest all of your cash. And number two, purchase property equal or greater in value. So I'm going to give you an example here. You sell a property for 1.1 million. You pay off your commission and closing costs. That is going to leave you with a net sale price of $1 million. If you do not want to pay taxes in your 1031 exchange, you need to buy replacement property for $1 million or more. Now, you can do that in a variety of different ways, right? So you could sell your property for 1 million. You could buy just one property, or you can buy multiple properties, right? So some of our clients will go out and buy 2 or 3 properties. And as long as all of those properties add up to $1 million or more, you're going to be okay. Another thing to note before we move on is partial exchanges are also allowable. So for example, if you sell a property for 1 million and you buy something for a lesser amount, let's say 950,000, that's okay. The only thing to be aware of in that circumstance would be that the trade down difference, in this case, $50,000, is going to be taxable. So you can certainly do partial exchanges. Just be aware that there will be a tax liability anytime you're not purchasing property equal or greater in value. All right, moving along. Rule number 3 to keep in mind when you're doing exchange is you have a time frame in which to complete your transaction. Your time frame starts the day you close escrow on the sale property. You're going to have 180 calendar days to go out and complete the purchase of your replacement property. And within that time frame, you're going to have to identify what you're thinking about buying on day 45. That leads us to our fourth and final guideline. How do you identify? Well, on day 45, you're going to fill out an identification letter using either the 3 property or the 200% rule. Now, most common is to use the 3 property because most of our clients want to buy 1, 2, or 3 properties. And on day 45, using the 3 property rule, you can nominate your first choice, your second choice, and your third choice. Once you have nominated those 3 properties, you are locked into buying from that list. And after day 45, you cannot change the list. So very importantly, if property number 1 gets sold to someone else on day 46, you cannot replace it. If property number 2 burns to the ground on day 47, you cannot replace it. You've got one option left on your list. And if you cannot close on this third property here, you do not have a valid exchange and you will end up paying taxes. So very, very important to make sure you are identifying property that you have a good chance of getting into contract on. Now, if your intention is to possibly buy more than 3 properties, there's a way to do that. You have to identify using what's called the 200% rule. The 200% rule will allow you to identify as many properties as you want. There is no limit on the number of properties. However, you are limited in terms of the total value. Now, the 200% rule states that you can identify as many properties as you want, but the combined value of all that real estate cannot exceed 200% of what you sold. So, quick example here. You sold a property for $1 million. You can go out and identify 6 properties as long as the total aggregate value of all this real estate does not exceed 200%, or in my example, $2 million. All right, so there you have it. 4 basic requirements. Number 1, make sure your properties qualify. Number 2, you have to purchase property equal or greater in value. Number 3, you have an exchange time frame of 180 days. And number 4, you're going to need to identify what you're thinking about buying on day 45. Now, again, very importantly, if you have any questions, we have answers. So make sure you save my contact information here. You can access me anytime or my staff at 877-471-1031 or shoot me an email. It would be our pleasure to help out on your next 1031 exchange. We consult with clients about the process all the time, so don't hesitate to give us a call. Thank you and look forward to working with you.